Good evening, everyone, and once again, welcome. My name is Yogesh, and I'll be conducting the webinar today of keys and ways how to trade effectively in 2021. And once again, most welcome. Thank you so much for joining this session. And I see a lot of names right away who have seen these sessions before. Every time I conduct a new session, they are here. So most welcome to those people who have attended such sessions before, and most welcome to the new audience who are planning to understand how to effectively trade in 2021. The very purpose of doing these webinars, since last 1 years, we have been very active in doing webinars after the pandemic happened because seminars was something which we couldn't do, and the need to spread more and more awareness about the markets and the risk it involves was increasing. So we have done a lot of sessions past year related to oil prices, related to portfolios, related to market neutral strategies, seasonality patterns, and a lot of trading strategies, US elections, the impact of elections on your investments. Today, we are going to talk about how to effectively trade and what are these effective keys to the investment. I would really request to people who have their notepads and pen. We'll also be discussing today about a few long-term stocks which we have did some research on, and I'm definitely going to share those portfolios with you. So you can click pictures, you can write about them, and most importantly, if you have any questions, please go ahead and keep writing on the chat, because this is supposed to be a very interactive session. I used to do a lot of seminars, and I used to get so many questions coming in, and I hope that I'm able to answer all the questions. Otherwise, definitely one of our guys or one of your relationship managers will get back to you and answer the questions which I'm not able to do it here. So please keep writing on the chat option. You have that option, and we'll definitely try to answer while we do this session. So to begin with, when we talk about the investments, and this is something which I really want to clear about, this is not one of those sessions where I will tell you any secrets of trading or any so-called trading strategies which can make billions and millions out of you, because there is no such thing. It's very simple. Every business, every transaction, every investment has a dedicated risk, and all you should know is how to manage those risks. And that's the only way to make a profit, by effectively managing your risk and minimizing your losses. I always tell everyone that if you focus on minimizing your losses, you might end up making a profit. But if you only focus on the profit and you neglect your risk, you neglect your losses, then it will be very difficult for you. So please try to understand the session, and I'm available for a one-on-one session also. Please give me a yes or okay if you can hear me properly, if you can see my presentation, because at the end of the day, it's internet. Sometimes there's a lot of congestion, so I want to make sure that everybody can hear my voice, everybody can see what I'm showing on the presentation, because I'm going to share a lot of portfolios. So I just want to make sure that everything is crystal clear on your device. Okay, great. I'm getting yeses and okay. So thank you so much for replying on that. So as I said, every investment will have a risk, and this is no different. That's why, please, if you're doing day trading, speculation, if you are investing, do not borrow money from anyone. Do not leave your job thinking that this is a source of income. Investments are subjected to the risk, and this is something which has to be taken very seriously, because there are a lot of people who are doing seminars and webinars which shows you Ferraris and bungalows and cars, and that's not the right thing. This has risk, and it has to be taken very seriously. Now, coming back to the effective ways of investing, and most probably I'll start with the fact, investments during a crisis and investment strategies during a crisis. We saw past year was the pandemic year, and today people are talking about a lot of vaccines. People are talking about a lot of things where expectations are that with vaccines coming in, the pandemic will slow down. Now, the idea is The coronavirus, when we thought it was almost over, a new version came in. And then we saw vaccines coming in, and we saw different vaccines coming in. Has that uh, stopped the volatility in markets? It has not. With vaccines coming in, uh, not that people have started going out already, not that countries have removed the flight or the travel ban. It still exists because now this has become the new normal, right? So when we talk about investments during a crisis or investment strategies during a crisis, by crisis, I just not only mean the virus or the pandemic, I mean during the time of extreme volatility, during the time when we see markets going down or when there is expectation that markets might go down, what you should do. And this will follow every time throughout the year. So first example, low investment risk only. uh, there are a lot of ways where you can take aggressive risk in products like Bitcoin. Okay, when we are talking about cryptocurrency, Bitcoin moves a lot. I have my live trading account open. The real-time prices are open, and I'll show you how Bitcoin has moved in the past 1 year. And definitely, please feel free to ask more and more questions. So, when you are investing into the times where there is already a lot of distress, when there is a lot of uncertainty, please make sure that you're away from the volatile, most riskier instruments. Okay, like cryptocurrencies, like bitcoins and etc. People are thinking it's a hedge against inflation, but this is a very different thought or a belief system. Gold is a different product. Bitcoin is a different product. We cannot compare. We cannot say that Bitcoin is a digital gold. Obviously, there will be a lot of opinions on this. There will be a lot of arguments on this. But gold has an intrinsic value. Today, if I ask you that the value of gold, let me please do reply on the chat and be very open and very clear because there will be no right or wrong answer to this. Do you think gold prices can go to zero? Just a clear yes or no. If you feel it can go to zero, then please say a yes. If you feel that it cannot, then just say a no. Go ahead, guys. Go ahead. Let's start being a little more interactive. Okay, I got 7 no's yet. Okay, 9, 10. Okay, okay. So far, what I'm seeing is everyone is saying a no. Gold prices cannot go. It's actually so one thing. Everything is possible. I got one answer. Everything is possible. This everything is possible is a legit answer, of course, because nobody thought oil prices can go zero or negative. But in a futures market in April, oil prices did go negative. But again, what I'm talking about is a consensus. So I see that most of you, I got 2 people who say technically it can, everything is possible. So I get that. Majority of you say no. So that's the probability. There is no right or wrong answer. Those who feel it can, there's a possibility it can. Nobody has seen the future. What happened with oil could happen with gold. Those who think cannot, again, it's a long shot to expect for gold prices to go down because gold has a certain amount of intrinsic value attached to it. Whether it is weddings, whether it is festivities, whether it is central bank, gold, people start purchasing gold. When there are uncertain times, people start purchasing gold because it has an intrinsic value to it. And that's why gold has acted as a safe haven during pandemics, during elections, during trade wars, and we have seen gold prices considerably rising, right? But when we talk about Bitcoin, Bitcoin is not connected to central bank. Bitcoin is not connected to GDP data or GDP numbers or job numbers or anything. It is not, again, a safe haven asset. It is, at this point of time, has become a major point of speculation. A lot of tweets about cryptocurrencies by Elon Musk has sparked the bulls among the cryptocurrencies. So we have seen today, Bitcoin is up by 15%. We'll share the chart right away. So the point is, if something which has the potential to go up by $7,000-8,000 in a day, it is still a high risk asset. It's high volatility and high risk. And when times are distressful or you have a specific amount of money to invest in a specific target in your head, refrain from investing into such high risk instruments. Not because you don't believe in it or anything, it is just the risk of investments in that is pretty high. So try to be connected to the low investment risk products only. Second, investing in consumer staples. A good way to make sure that the volatility does not hit too strong to your portfolio is try to invest into consumer staples, something which is non-cyclical, something even if at a point of recession, the demand for those products will continue to go high. Talking about the essential products, not the consumer brands, not the big brands, or not the tech companies. Try to invest more into consumer staples. Again, guys, I'm sure everybody has a different outlook towards the market. For you, maybe you are looking at the stock market all-time high, thinking I should buy Tesla or Facebook or anything. But this, what I'm telling you, is just to make sure that you have safeguarded your portfolio against the volatility, right? I will also share with you some stocks, good top 10 stocks of China, top 10 stocks for a longer period of time, a few bonds which you can invest in. So I'll share all that, but this is a very general view of investment. Again, third point, recession resistant industries. So at this point of time, I see that it's a kind of contradictory thought. When when you're inching towards a point where you see a lot of distress in the economy, you should be more connected to the recession resistant industries. Now, it could be anything, it could be healthcare, it could be any sector which is an essential product. Ensuring sufficient diversification, the normal saying that don't put all your eggs in one basket, it actually means that you should have a sufficient diversification. So which means, why I'm telling you this, that those who believe that it's a good time to buy the Amazons and Teslas and tech stocks, please make sure that a portion of your portfolio is allocated to industrial stocks also. Because with Joe Biden becoming the new president in US, and there is a lot of massive stimulus which is coming in. Injected cash in the economy will definitely be used to improve the infrastructure and more construction. So be open to the industrial stocks as well. So you have to make sure that you're not only exposed to one technology sector, but also to industrials, also to utilities, healthcare, all different areas. So make sure that there is a sufficient diversification, and not just industry or sector wise, but also country wise. A question is that, can I get a copy of this webinar? It definitely will be recorded on YouTube. So if you're not able to attend at this point of time, then definitely you can visit us on YouTube later on after 2 or 3 days, and you can get a copy. And those who, again, as I said, I am available for a one-on-one session as well. So please, definitely we can touch base later. Second last, we're talking about dividend stock. Now, dividend stock means dividend is something which a company declares every quarter in US. In Indian stocks, they declare twice in a year. But every company in US, most of the companies in US, they declare every quarter. Every 3 months, a certain amount is declared as a dividend. For example, ExxonMobil as a company declares, say, 80 cents dividend every quarter, which means by the end of the entire 1 year, around $2.50. So if you have 1,000 shares of ExxonMobil company, you might have $2,500 by the end of the year just as a fixed income, just as a dividend from that particular company. Yes, capital gain or loss will follow. If you bought stock for $30 and now it is 28, you're losing $2 every share. But you are also making $2.5 every share by the end of entire 1 year, because dividend is something which the company distributes up after the net income, from their net income. And this is a reward which is distributed by the companies. Now, there are two kinds of companies, one which distribute dividends, second, which reinvest their net income, which reinvest their profits into their own business. And mostly this is done by the tech companies. The tech companies spend more time on research and development, so most of their profits are dedicated to be reinvested because they're still growing. But some companies like Coca-Cola, ExxonMobil, Vodafone, Verizon, AT&T, they have good dividends because they are not at their growth phase, they are at their value phase. So they will not reinvest a lot of their money into the company itself. So that's why they are good dividend companies. They're very less volatile. They will not move too much. So dividend stock is something, if there's a recession coming in, you can always be prepared to invest into a company which will give you a fixed income, and it will be very less sensitive to the market. So I have one portfolio also which can show you that high dividend and low market sensitive portfolio uh, which you can look into. Last but not the least, precious metals. As I said, gold. Uh, I am not saying that buy for a longer period of time, but you should definitely be exposed to gold mining companies during uncertain times, because if gold prices start moving higher, we have seen a lot of gold funds, we have seen a lot of gold mining companies start moving higher as well. Trading or investing into a direct commodity can be a bit riskier due to the volatility. So you can take part in a gold ETF, a gold fund, or a gold mining company, and it can help you to diversify in the right way. Now, these are the ways how you can effectively trade. As I said, I'll give you both the scenarios. I'm sure there are people who would like to know more different areas of investment. I'm definitely going to share that with you. But let's cover the basics very quickly. So they say grow your nest. So it's a snowball effect which happens. Like if you invest $10,000, and if you're getting a specific rate of return from any investment and you reinvest that return, uh, sorry, presentation only audio. No, it's not an audio. Somebody just asked me if this is an audio. I'm able to. I hope you're able to see the slides. You just have to, I think, check your settings again. Now, if you reinvest the profits, and you will see that over year, those profits, when reinvested and the returns generated on it, becomes a big ball. So something which started with a small ripple effect, became to a bigger snowball. $10,000 probably invested over a period of 1 year could be $40,000 or $50,000 over the period of X years, depending on how longer you leave your money at work for you. So that is something which is called a snowball effect, something which is very common. Second thing is, as I said, no pain, no gain. If you think that there is any investment which is risk-free, it's probably a lie. There is no investment which has zero risk. If you're investing anywhere, it will have the risk. So you have to make sure that whenever there's a investment, you calculate your risk. And to much more relevant to the industry, I will tell you, if you're taking a trade, you have to make sure to give yourself an amount of loss. That, okay, if my price goes to this price, I have to book a loss irrespective. I cannot be holding this particular commodity for this period of time, because what happens during that time, your money is locked and the cost of opportunity increases a lot. So you have to make sure that you calculate your losses and you manage your risk effectively. Diversification, as I said, that you need to spread your money into stocks, bonds, and within stocks, dividend stocks, value or growth stocks separately. Comes the point time horizon. It's very important. So I was just talking to a gentleman yesterday, and I was telling him that if you have a stipulated time frame in your mind, that I need this money after 3 months, I need this money after 6 months, then no point investing into high risk assets like Bitcoin or in commodities for a longer period of time, because there can be a lot of movement which is unexpected, and you can lose a lot of money, and you might not get that money back in the stipulated time period you want to. So time horizon is something which you have to understand, and then invest, then pick your asset class. And then there is one thing called dollar cost averaging. Now, dollar cost averaging is a very interesting concept. I'm sure many of you must have heard this. If right now you're looking at Microsoft, so let me show you the live platform, how the markets look at this point of time. This is the live platform right away. I'm talking about, let's say, Tesla, a much talked company, much talked stock at this point of time. Everybody must have seen this. This is the chart of Tesla. This is what it looks like. And I'm looking at the last 2 years of Tesla. And now when I'm zooming out, it is last 3 years of Tesla. Currently, it says $867 per share. But Tesla has actually went to $2,000 per share during pandemic, and then there was a stock split into 5, so the stock price came to 400, and now again it has come to 800. So basically the stock is performing exceptionally well, and we have seen the prices going higher and higher again. Now if you look at Tesla, if Tell me, if now when you're looking at Tesla, this is a chart, this is a graph looks like, I'm sure everybody can see this now. How many of you, okay, I have one question also, I'll take this question please in a while. Tell me, how many of you are thinking to buy Tesla at this price? Now when you're looking at the graph, when you're looking at the chart. How many of you would buy Tesla or would not buy Tesla? Just a yes or no question. What do you think? Looking at this particular chart, if you would want to, okay, started getting answers now. 1, 2, okay. Not a buy, not a buy, not a buy. Okay, everyone not buying. Okay, that's good. Okay, I got one yes. One again, one no. Yes. Okay, that's good. Divided opinion. Love when there's a divided opinion. That means market is not one-sided. Those who said yes, you're probably riding on the bull momentum. You're expecting the prices would continue to go up given the status of the stock in last few months. I get that. Those who said no are probably thinking that the stock is overvalued. It has gone way too high and it might come down. Uh, Another very interesting answer. I will buy this stock if using the money that I don't need for a year. Okay, that makes also a sense that you are ready to take a risk for the next 1 year. That in case if you don't need this money for a year, so I'm ready if the market comes down. Now the point is, those who are thinking that I will not buy now, if the stock price goes up to 1,000, again you regret because you missed an opportunity. You may be not regretting, but you still missed an opportunity. Those who bought are probably in profit. But even those who entered now in the buying position, for both of you, yes and the no's, there is a way that you can spread your risk by using dollar cost averaging. Dollar cost averaging means if you want to buy 1,000 shares of Tesla, just don't buy 1,000 right away when it at its peak. Start with 300 shares. So whatever is the total number of shares, or whatever is the total number of amount you want to purchase. Let's say you want to invest $100,000 in Tesla. Start buying worth $30,000 first, and then wait for a subsequent correction, say 10% or 12% market fall, and then buy again another 30,000. Again, wait for a market fall, then enter another. So try to divide the total value of your trade into 3 tranches. And that's how you do a dollar cost averaging. Because when you buy at different tranches, this, and then this. So your average price instead of this will become this. And the idea is that you will not end up buying everything at once, and it helps you to reduce your risk at the same time. So whenever you see that market is at all-time high, try to do a dollar cost averaging technique. And yes, somebody just pointed out in a bull market, it is better to stay with winners. Absolutely. So direction is what you decide, but also what I'm telling you is about the quantity. If you are smart enough to manage your quantity and do the dollar cost averaging, whether markets, now what we learned from 2020, that markets create volatility. Situations can create volatility, and it is unexpected. But also what we learned in 2020 itself is that volatility creates opportunity. Those people who invested during the lockdown made the highest of the returns. Highest of the returns. And you know who you are. I'm talking to a batch of 50 people right now. And I can see a lot of people texting, I invested, I invested, I invested. So you know who you are and you know what you did. You invested during the lockdown and you must have seen a lot of stocks going higher. So volatility creates opportunity. But what we have to do, we have to be very careful that during this volatile sessions, we do not become very overconfident because markets can quickly go up and the same momentum come down. So what you can do is you can do a dollar cost averaging. Whatever you have in total value, start the first tranche. And when you see a percentage decline, say 8 or 10% decline in the stock, again go for the second tranche. Again, when you see a percentage decline, go for your third tranche. So that helps you not to take a very big position at once and also to divide your risk under different tranches. Right? Now, going back to the presentation. So this is what dollar cost averaging is. Last of these ideas, what we are discussing is don't buy and forget. I know a lot of people must have heard about Warren Buffett's policy of you buy a business, leave it for 20 years. But you have to understand now that when you look at a US stock market index or any stock market index, graphs are like this. The recovery is like V-shaped recovery. And again, it started coming down when there was the risk of another lockdown. So those people who booked profits. So 2016, when Donald Trump became the president, till 2020, the stock market saw the highest rally. 4 years of stock markets going higher. And then in 2020, when the pandemic came, the markets went down lower or almost close to the 2016 levels. Now, when that happened, those people who bought at 2016 and never sold at 2020 came back to the 2016 levels, which means 4 years of their profits erased very quick. Yes, if they continue to hold on at that point, they would have still gone up. But they have now, markets have reached to the same place it was back in 2019. So technically, the same returns which you had in 2019, now you have in 2020, because it went down so much to 2016 level and again came to. So you have to understand that if S&P 500 on an average, a US market index on an average, normally moves around 13 to 14%. That's your benchmark. So if you are getting more return than that at any point of time, you need to exit and then wait for another correction, so enter. If it doesn't happen, then don't enter. Wait when it happens. There are so many sectors and so many industries. When tech is going up, probably energy is going down. When consumer discretionary, the luxury brands are going up, consumer staples are going down. There will always be a sector, an industry, and a company to invest into. So you never miss an opportunity. Right now, tell me how many of you know about GameStop? That is one company which has ignited everyone to know about stock market. GameStop. How many of you know about GameStop? Say a yes or no. Those who don't know are about to know right away. I'll tell you what it is. Those who already know, well done with the information. Tell me, how many of you know about GameStop? Just a simple yes or no. I'm sure if you know about it, then because this is something which has been going on in the news. So those people who have not heard about the stock, GameStop is a company which is involved into brick and mortar gaming. Back when I was a child, I would go to these places where I could play video games. There were brick and mortar locations for that. But then PS happened and online gaming happened and so much happened. Now that business is pretty much irrelevant, and that stock was around $6. But due to a lot of communication on Reddit and a lot of manipulation among the market between retail traders and hedge funds, the stock price shot up from $6 to 60 and 60 to 400. And then from 400, it came down to 90. So this was a complete speculative trade, but that also proved that markets are not as rational as we think they are. So expect the unexpected. That will happen. So you have to understand that just buying and forgetting about it, it doesn't mean that you're always going to be successful. Those who have heard about Jet Airways, you know what I'm talking about. There are a lot of people who Jet Airways was the number one airliner in India and the biggest market share. And then it just completely lost. So buying and forgetting about a stock, it's not going to help you make money. You have to make sure that you find out the exact level so you can book profits and then again go ahead and take another position. Now, this is one small chart before I move on to the final portfolio to discuss with you. The consumer sentiment versus S&P 500 analysis. S&P 500 is a US benchmark. Now, if you see many times, and it's a very good chart. If you understand, consumer sentiment shows how a consumer feels about the daily market movement. So if you see in 1990s, there was a bull market which started, and markets were up, the consumer sentiment was also higher. If you see in Feb 2009, when the financial crisis happened, the indices, the stock index started coming down. At the same time, the consumer confidence, the consumer sentiment in the market also started coming down. Feb 2020 till present, we saw consumer sentiment going down. Look at this particular chart. Look at this black chart right here. Right? This is a black chart. This one line, if you can see small, consumer sentiment tumbled, but S&P 500 going higher. This has happened during the pandemic, where we saw markets going higher, but the consumer sentiment, the consumer confidence was still low. How that works? That means because S&P 500, the stock market rally was driven by the big five, Amazons, Teslas, Facebook. These were the companies, Netflix, Zoom. The tech sector pushed stock markets higher. So please understand this thing, that a lot of rally which S&P 500 has seen has been due to the tech stocks. And if there's a decline also, that sector will be the first one, maybe the first one to come down. So that's why it's the need of the hour to diversify more. Now, let me show you a few portfolios which we are looking into. And this is going to be the stock picks as well. So you can probably note down, and we'll discuss a few more strategies also. Some sectors which, a lot of people have not explored so far. So let me start with the long-term portfolio first. So we are looking at now this one to begin with. Let's say right here. So now I'm looking at first top 10 picks of 2021. And again, as I said, there will be a lot of discussion. Again, you can take down this, you can click a picture. I'm available one-on-one to discuss about these portfolios as well. Please understand this is not a recommendation right away. I would suggest anyone who is reading this portfolio, please talk to the financial consultants first, understand your risk appetite, and only then go for this. Right? Now, let's start with the first one. Let me zoom this. Perfect. Okay. Now, this is just a quick glance, but I'll take every stock one by one. Now, this is first one is Teladoc Health. Now, Teladoc Health, at the same time, there are analyst ratings which are also given for the stock. If you see, we are looking at the analysis of 31 Bloomberg analysts. Out of them, 20 have suggested a buy, 11 have suggested to keep it on hold. A price as on 20th January is 246. 52-week low is 93. 52-week high is 253. As of now, I think if I see the current price, and guys, you can keep checking. If you are on Google, so you can keep checking it. The current price has gone to 292. So that's a kind of good thing, because I think this was around 246 last 20th January. And if you see the stock price now, it's already 292. So the target price, the 52-week high was 253. And the expectation was again still on the higher side. So these were the picks of 2021, guys. Now, Teladoc, what it does, it's basically, we're talking about medical technology now, guys. Medical technology is something which in pandemic explored very well, because medical technology was something which nobody thought nobody thought that I will talk to someone on internet and I will get access to the healthcare professionals. Nobody thought that, but it's happening. Now, this is a company which is providing internet access to healthcare professionals 24/7 for patients around the world. Demand for company services dramatically increased in the year of COVID, and now a lot of companies are entering into digital and remote healthcare services. So now the point is, if you see, their shares have quadrupled over the past year. 2.8 million telemedicines in the second quarter, up by 200% from the year before. Now, telemedicine is a win for the entire healthcare treatment chain. physicians able to attend more patients, insurers paying less in fees than in-office visits, and so much convenience in consultation, guys. So that is something, again, which we are looking at, one of the interesting picks. And Teladoc and Livongo, now one company, is going to be a telemedicine personalized solution powerhouse. So this is something which is there. And again, as I said, this is what our research is doing at this point of time. You can always talk to your expert consultants and then only go for one single thing. If you have any questions, keep asking and keep noting down the names. It will help you out to further bring on any questions later on. Now, getting back on the portfolio, DraftKings, which is fantasy sports. Now, fantasy sports, I'm not sure how many of you are aware of the area, but fantasy sports is something which has increased a lot. And so this is, again, we are talking about the point. Some of the investors might be okay to trade into this, but then there are a lot of companies which are, there are a lot of investors who don't like fantasy sports as a suitable way of investments. Because at the end of the day, it's a competition where there is a sportsbook gambling and the stock prices move accordingly. So DraftKings is something which is into fantasy sports a lot. And they have signed partnerships with ESPN, Turner Sports. There are a lot of leagues which are being sponsored. And at the same time, there are ways, like what has happened with, now if you see DraftKings price, last price on 20th Jan was $53, right? So how the markets can be unexpected. Now, if I see it, for example, so what I'm doing is also currently checking the price on the platforms. I'll keep you updated live because these portfolios have been prepared recently. So let's say currently I'm looking at draft, and please keep checking the prices yourself as well. So it will give you a range for yourself. Right now, DraftKings is $61. Now see the example of what we are discussing right here. Currently, last time when we saw the price on 20th Jan, it was $53. 52 high was 64, and now it is 61. So again, there has been a movement in the stock. But then, as I said, these are the top picks of 2021. So you can always check with your consultant and take the trade. So this is about fantasy sports. Digital turbine. So we are talking about, again, 5G is something which is going to be coming in the future. And this is about the mobile phone ecosystem, Android operating system in there. Now, their major carriers are AT&T and Verizon is one of the top companies for 5G. Netflix, Amazon, they want to pre-install their apps on Android phones, so Digital Turbine is something which helps. There are a lot of apps being added to the Android platforms, and the number of app slots has increased. So now, and there are a lot of people who are spending a lot of time in mobile phones, given everything is so much mobile right now. So Digital Turbine is something which integrates the app system, the ecosystem to the apps. Now, this is also something which you can look into, because from its highest point, the stock has come down almost 20%. Now, whenever there's a decline from the yearly high, and if it's a futuristic company, then it is kind of available at a good discount. So when you look at the fundamentals and technicals, it does make it one of the promising companies to look ahead for the next year. And it's a very different area of investment. So this is something which people would hear less. Followed by Toyota. Now, not one single person over here, I'm sure, doesn't know about Toyota. Toyota is one of the excellent companies. Best part, I'll summarize this, what is happening with Toyota. EV market, electronic vehicles are increasing. Increase in Tesla stock is one of the, so there are companies like NIO, there are companies like BYD, Tesla, which are in EV. Toyota is going to come up with their EV, electronic vehicle, by the end of this 2021. And their batteries, which they are going to use in the cars, are supposed to be 50%, expected to be 50% less inflammable than the batteries which are used in normal cars. So there is a lot of expectation from Toyota, and especially them entering into the EV, it has become one of the most better stocks as compared to any other normal automobile company, because EV is going to be the future, given how we have seen renewable stocks going higher. So Toyota is also something which we are keeping a focus on. Then followed by Zoom Info Technologies. Many of you must have seen Zoom Info. It is cloud-based go-to-market intelligence platforms, has a lot of details about marketing professionals. So if you want to connect, increase your network, Zoom Info is something which you can look into. And guys, why are these stocks now? It's not like Zoom Info you have not heard before. But why recommendation now? Because the pandemic, the rise of COVID-19 and the rise of digital era has now made investors mentally enable them to go for such kind of things. I mean, you don't have to go and meet. You can just find out the contact details and you can go, you can do everything digital. Lead, this is the most important thing. Every business needs lead generation. And when lead generation can be done digitally, you don't have to go to the market to do that, then it becomes much more productive for a lot of companies. So Zoom Info Technologies is something, they have a very strong third quarter as compared to their second. They have a new sales engagement tool which has the potential to drive 20-30% price uplift per sheet. So this is something, again, we are looking at the company. The name of the 5G company. So we're looking at Digital Turbine. 5G company is Vodafone and Verizon. A company which is related to mobile ecosystem is Digital Turbine. 5G stocks are specifically Vodafone, Verizon. These are 5G companies which you can look into. The ones which we are discussing right now about was Digital Turbine, which is a mobile ecosystem. Right. Then followed by eHealth. eHealth stock has come down a lot in last few days. So we, after this particular portfolio, we saw that particular stock performing very poorly. But the idea behind this was, again, the Medicare segment has grown in last few years. And with Joe Biden coming in as a presidency, Affordable Care Act, which was suppressed by Trump, now it will be renewed. So again, the private health insurance shopping might again start. So now the point is, it's an online platform that provides insurance for consumers, for individuals, for families. So with healthcare again setting back in with Joe Biden, private insurance might again start popping in. So this is again one of those companies which we were looking into. Azure Power. Now this is about clean energy, guys. All of you must have heard what is happening these days. A lot of stress on clean energy and green energy with Joe Biden. A complete Democrat government is right now ruling the US. And we have seen 2 trillion being of cash injected into clean energy sector. And we have seen renewable. I'll show you the live chart of the renewable energy basket and you will see how it has skyrocketed after the elections. So Azure Power Global, it is a solar power producer in India with a portfolio of over 7 gigawatts of solar power assets. And this is the first Indian energy asset to be listed in NYSE. So Azure Power is this company which you can look into. In-house engineering requirement, construction expertise, and they are able to provide a solar power to different stretches of the country. So this stock has gone up almost 300% compared to the last quarter, last fourth quarter, and S&P has gone up by only 17%. So this is a part of S&P, and S&P is gone up by only 17%, while the stock has gone up by 300%. So this is something, again, guys, which you can look into. It's a clean energy stock listed in NYSE with Joe Biden coming in, clean energy being pushed over. This is something which you can look into. You can also check the current price of Azure Power, whether it has gone up or down, because as of 20th Jan, the price was $45. I think as of now, if I were to check in the live platform, $40. So I think it was 45. Currently, it is down by $5. It is at 40. But again, look into the longer period, look into the longer sector, and talk to your consultants and do that. Now, coming back, Nomura. Again, Nomura is a Japanese company, and they're into financial securities and investments. Guys, a lot of analysts have been favoring Japanese equities over European equities. They still feel that Japanese equities are undervalued as compared to Europe. So maybe you can also invest into Japanese ETFs and funds and few specific companies. So we saw Toyota, we are looking at Nomura Holdings. Then there is Clover Health, again, which is Health Investment Corporation. We are talking about a health maintenance organization with a Medicare contract. Hospital coverage, doctor visits, drug coverage, no cost, including no cost extras. So this is something which also you can look into. This company has around 57,000 members across 7 states in the US. And again, as I said, if you look at last price, it was $13. Highest of the year, 17 and a half, lowest 9.9. So market cap is pretty low, and these kind of companies are again which are low value. You're not looking at the big tech companies. You're trying to diversify your sector. And then last but not the least, Yelp. Yelp got impacted a lot because shutdown happened. This is one of those websites through which you can review, and you can see Bloomberg analysts. Majority of them are suggesting a hold, while only 3 of them are suggesting a buy. So if you see the lows and highs, 12 is the yearly low, 52-week is the high is $36. The global shutdown of restaurants heavily impacted the online recommendation services. Advertising revenue took a major hit, almost $24 million lost in the second quarter. Revenue dropped by 30%. But now when economies are opening, again, the ad revenues are doubling in the third quarter. The business has rebounded. So now, at this point of time, those companies which were battered down during the pandemic, if you are a kind of person who believes that, okay, vaccines are coming in and business starts starting again, these kind of companies can be good for your portfolio because even their recovery can make a lot of sense in your portfolio. So that's why we have divided this. Now, again, guys, this is one portfolio. At the same time, this is about US. So I told you that you have to diversify different sectors. So now there are few stocks which are Chinese companies as well. And again, I'm looking into emerging industries, emerging countries, but then we are still looking forward for sectors which are most talked about. So Xpeng is again a clean energy company, and they are very much inclined towards green energy, renewable. And as I said, why green and clean energy at this point of time? With Joe Biden's election win, US is again very pro-climate, net zero emissions. We are talking about by 2035, the focus of Joe Biden is to reduce the carbon emissions. And China is already in a good momentum since 2016 to develop a clean battery technology for automotives. And China also has a 5 green initiative plan. So companies which are now same sector, instead of US, you're now looking at a Chinese company also. So that kind of diversifies your country-based exposure. From US, you are moved on to Chinese. Company reportedly had 40% of its employees focused on R&D as of June 2020, set to launch XPilot 3.0 by 2021, which is an inbuilt assisted driving software, and it has features like autonomous parking, etc. So as you can see, a lot of this company is directly competing with Tesla, NIO, and Li Auto, which is something which is into EV vehicles again, right? So you can look into Xpeng. This is a Chinese company, and again, as I said, guys, please check your risk appetite and only then talk to your consultants and then go for these companies. Data Group, this is again, it's on-demand retail delivery service, largest local on-demand retail company. Now, if you see, they have enhanced the delivery model, their efficiency is going higher, work from home is increasing. So again, the orders delivered by this particular company are also increasing because people are working from home. Now, this culture has developed. Pandemic or no pandemic, if people can work from home, they would just go for it. So at that point of time, if these are companies which are delivering at home, this is an added advantage. So even after Chinese economy bounced back from the recession of 2020, change in mindset among individuals to remain as contactless as possible will continue. So that's what I was talking about. The mentality of the people, it's difficult to change. At this point of time, if you don't have to come to my office and you can connect on Zoom, then you will definitely prefer connecting on Zoom now and months later. Because now this has become the new normal. People are exposed to technology, so they know how it works. So this is one of those on-demand retail delivery service. And given how the future is going to be like, you can look into this particular Chinese company. Cloud company, which is Kingsoft. We're talking about a market cap of $10 billion almost, and this is cloud platform services. Any company which has invested into the cloud computing segment is something which is expected to grow in the years. So you look at Amazon. Amazon's 15% revenues comes from cloud computing, and that's why it's one of the favorite stocks in the Wall Street. So a cloud computing company can definitely be your idea of futuristic investment. This is different from the normal tech, the Facebooks and the Teslas, which you will look into. One Connect, a service platform, provides cloud native technology solutions again. They are upgrading the service. And again, Chinese economy is moving towards a new pattern of development, digital drivers. So this is something which is going to transform the financial industry. Cloud computing connected and integrated with finance or integrated with any kind of sector will always improve productivity among the firms. So now this is something which is much more innovative, much more transformed, and this is going to be the futuristic bit. So what I'm telling you right now, guys, again, tech, but among tech, what can be more futuristic and what can be more easier? Now, Tencent Music Entertainment, Tencent, everybody knows Tencent by the name. If you have a problem or if you had kids who were playing PUBG, Tencent was behind it. Now, this is Tencent Music Entertainment. This is online music entertainment platform in China. Now, highly popular, innovative among the music apps. So this is something also which you can look into. Then there is Baozone, e-commerce solutions, e-commerce companies. Again, as I said, e-commerce is with the work from home status, e-commerce companies, online retail delivery companies. This is something which is doing really well. Go back to GSX, Techedu, remote education company. This is, I'm sure many of you must have seen, institutions, educational institutions have gone completely remote and online. So, and those bases, those companies which are providing remote education, I think that is something which is, these kind of companies have grown like 50% growth in the first 3 quarters, a revenue of $700 million. So this is something, again, it's here to stay. Even in 2021, there are still a lot of institutions which are not leaving work from home. They're still doing it. A lot of institutions, educational institutions, still providing remote service. So this is again one of those companies which is continuing to grow. Travel Sky Technology, aviation information solution. So in e-commerce solution, production services for aviation alliances. Might seen a big low of $11. Again, 52-week high of 21. Then there is Ping Health, which is again into tech-based healthcare platform, portable platform for consultation. We just talked about Teladoc in US. So this is again one of those things which you can see in China. So again, same sector, but different company, different country. CSPC Pharmaceutical, investment holding company that manufactures and sells healthcare products across the globe. So core operations include manufacturing genetic drugs, vitamins and medicaments for cancer, tumor, and hypertension. So even among healthcare guys, try to resist from the normal Modernas and Pfizers because they have already grown during the pandemic with the expectation of vaccine coming in. So a lot of people had questions that why it's not going up now, because it has already been priced in. So look for a different company in pharma as well, right? So this was something which was one of the topics. Now coming very quickly to few portfolios. Now something which I'm going to introduce today before we leave is a SPAC. Note this down, guys. This is freshly prepared 3rd February. We were been discussing SPAC. If you're still there, look into SPAC, and these are called Special Purpose Acquisition Company. Okay. If you read more later on about SPACs, what it is about, and talk to our consultants, they will explain you more. SPAC firms are the shell firms, basically firms which are only created with the specific purpose of helping those companies which want to go for the IPO, but they don't want to go through the process, the actual process of IPO, because they lack that requirement to be listed as one of those companies. So a SPAC company specifically is created to help the companies to get into an IPO. So what they do, a SPAC company would raise capital publicly and then merge with the company and give them the capital and then help them to get listed in the IPO. So if you know about Nikola Corporation, Nikola did not launch an IPO through a traditional form. How the IPO is launched? Nikola was helped by a SPAC company which merged with Nikola and then launched it as an IPO by providing the funds. So it's more of a private equity company based. Now, SPAC companies, they look very attractive, but at the same time, their risk is higher. So investors, they have to research thoroughly before they get into this particular sector. Why I am showing you this today, you must have, you don't see these kind of portfolios very regularly. SPAC is a shell company which is created for the sole reason of raising money through an IPO to eventually acquire private companies in a reverse merger and make the target company public. So a SPAC company's target is to acquire a company and then make it public, help them to get listed in the stock market, because those companies are smaller market value and they do not qualify all the criteria of the traditional IPO process. So they are created by a team of professionals who are very well acquainted with the world of hedge funds and private equity. There are high profile investors lead the IPO for blank check firms to accumulate a larger lump sum of capital. Now, the people who are running these SPACs are the likes of Bill Ackman and Chamath Palihapitiya. So these are stock activists. Once the IPO is done, the money raised is transferred to an interest-bearing account, and another management team strikes a deal with the private company who wishes. So once they raise the money, then they keep the money in an account where they receive interest till the time they find a company who wants to go for an IPO. So as I said, a SPAC company is created for the sole reason of finding out those companies which want to go for the IPO. Now, why this particular sector? Because 2020, SPACs have been there for decades, but we saw in 2020 that 50% increase in the SPAC IPOs. Now, that is like trailblazing, because in last 4 years, we have not seen such big growth. So there are a lot of people who are going through IPOs through these kind of companies. So now what we have done is we have found out those companies which are SPAC companies which exist for the sole reason of acquiring another companies and help them to go public, right? So these are few names: VG Acquisition Corp, FTAC Olympus Acquisition Corp. Then we are talking about GS Acquisition Holdings. All these companies. Now this GS Acquisition, for example, this is created by Goldman Sachs. It IPO'd in June 2020. It raised around $700 million. And currently Goldman Sachs owns 21% stake in this company. So there are a lot of companies which are creating their own shell and blank companies, and they help them to raise finance so that they further can help other companies to go public. Now, if Goldman Sachs has taken institutional ownership, which means large investment banks or mutual funds are invested into it, so it's a positive sign for this particular company also. So look for those particular companies which are a shell companies of bigger, like this company is a shell company of Goldman Sachs. Goldman Sachs has 21% stake in it, so much safer than any other company. Then there is Aspirational Consumer Lifestyle Corp, right? So again, when we are talking about this particular company, this was launched by Ravi Thakran, which is a private equity investor who also serves as the group chairman of LVMH, now representing a portfolio of brand across several categories. So guys, this is something, again, these are the names which are, again, there are pioneers involved into these companies. But as I said, please do your due diligence, talk to our consultants before you enter into SPAC companies also, because this is the investment in SPAC has increased by 50% in 2020. And that's why this has kind of, you search about SPAC as of now, Google it, look into investment research websites, and you will get a lot of information. Perishing Square, now it has raised $4 billion. Firm intends to acquire mature unicorns with still room left to grow. And again, their CEO is William Ackman, and there is a significant share in Wendy's International chain. So he has managed all those. And as a fund manager, Ackman has had his shares of failures as well. last few years, he has turned around his fund, delivered annual net value return of 58% and 82% in last 2 years. So that is again something which has gone. Falcon Capital Acquisition, again, there are a lot of people involved into it. We are talking about the brother of former US Treasury Secretary Steve Mnuchin. Now, again, guys, so what I wanted to tell you was to this particular session that there are a lot of sectors which are still untouched. Space exploration, like Virgin Galactic, SpaceX, a lot of companies are going higher in that also. So you can always look into that bit also. Before I leave, a quick snapshot of something we specifically prepared, and this is something which can also, before you leave, you can see it, click a picture of this, and perhaps this can help you out. Now, this is again a long-term portfolio, but this consists of stocks which are, again, I have discussed a few of them. If you see Teladoc, DraftKits, Digital Turbine, Zoom Info, Clover Health, a few more companies to add on. I just created this portfolio. There are a few ETFs which are based on gold, iShares Gold Trust and SPDR. There are a few bond-based ETFs also. So BlackRock Taxable Municipal Bond, AMT Free Bond. Then companies like AbbVie, which is biotech companies, something which we haven't discussed so far. A very good dividend yield company, steady growth, number one selling drug in the world, Humira. In recent years, drug has lost patent protection intentionally, but will lose protection here in the US in 2023. However, Humira sales decline is not new for the managements. They have still been constructing a very strong pipeline of products which are expected to come. So looking at AbbVie, there is good RX holdings. Again, healthcare when we are looking at. So when we are looking at these kind of stocks, look into companies like healthcare when it related to this particular share. Looks into Snowflake. Some of you must have heard about Snowflake. It's IT-based company, and Snowflake they did their IPO, I think last year itself. Total revenue 159 million, which is up almost 100% than a year ago. And product revenue has been increasing. Improved momentum of a larger enterprise customer, better economics, improved net retention rates. Again, cloud. All these are cloud-based companies. If you see their biggest advantage when it comes to, for example, providing a service, they have a very wide range of technology areas. Talk about data integration, business intelligence, advanced analytics, security, governance, everything. So how Microsoft has Azure, and then there is Amazon Web Services for cloud. Similarly, it's Snowflake. So it will provide cloud infrastructure. It can design the modern architecture also. And again, a very dynamic company, the revenue is expected to go higher. And then these are the usual companies which you can look into, right? So we have seen, again, guys, a lot of companies. I hope that you have noted down their names. And there is a lot of talk about Bitcoin as a trading instrument. Please remember, Bitcoin has moved really high today. Let's discuss about and see before we leave that how the Bitcoin momentum has increased and how much volatile it can be. So this is something also which you can look into. I've discussed most of the portfolios in this particular art. Very quickly to go back to the live platform and see. Look at Bitcoin at this point of time. We'll just go through a basic movement. Look at this, and this is last 1 week. From 39,000 to 44. Today itself, Bitcoin has gone up by 17%. Guys, that's $6,500 up today. So please understand this thing. There are a lot of risk involved in Bitcoin trading. So, I mean, risk and reward are higher. Please make sure that if you are investing into a cryptocurrency or trading into a cryptocurrency, you are putting a proper stop loss and you're not leveraging too much, because leverage is something which is not recommended at all. So that's that. One question was asked that, speaking about the risk, is it normal that we accept transaction risk? That is, we can accept taking a risk of stocks up or down, but the transaction itself for buying and selling must not have a risk by itself. How to completely avoid the transaction risk? So if you're saying transaction risk, if you're saying that means the execution is real time. So it is not something which is you have to worry about. When you take a trade, you enter into a market risk. So that exists. So that will never go. I mean, no matter how safe and secure you feel your investment is, but whenever you buy a stock, you are still exposed to a certain amount of risk. So that will prevail. Right. Any questions, guys? I'm getting a few questions over here. Um, are there any one-on-one sessions? Yes, there are definitely one-on-one sessions. If you want to book your trading session with me, just talk to your relationship manager, a person who's in touch with you, and he or she will definitely take some time, take your time, and will schedule a one-on-one session with you very soon. It can happen coming this week only. So nothing to worry about. One more question about how is the Microsoft stock. So Microsoft, good company. I think Microsoft is something which has continued to go higher. Like, for example, they are coming up with their own cloud computing. That's something which is very good. Microsoft deserve. Um, Microsoft has also got rid of their previous launches like Surface tablet, or they did some mistakes like acquiring Nokia, for example. So they're getting rid of all those, and the stock is a good long-term stock. It's a good long-term company, and definitely entering into cloud computing, then a different segment is open altogether. Is the same presentation available on YouTube? Definitely. We'll definitely put this recording on YouTube as well. So you can always check the recording later on. And if you want to have access to the portfolios, please talk to us, talk to your relationship managers. They can send you these portfolios, because this is anyways made for people to avail knowledge. But please make sure that if you are taking any decision on any stock, talk to your financial consultants before you take the decision. What about the best Indian companies to invest in? So see, there are again, there's a lot of speculation about which sectors to go for. As I said, Azure Power is a solar industry, which is an Indian-based company and is doing, expected to go higher. But at this point of time, I think instead of investing more and more into healthcare, you can look into stocks which are related to again industrial segment, because with the new budget coming in, if you see, a lot of taxes have been reduced. Now talk about different segments, like look into financials, for example, look into industrials. Is the presentation on Century Financial Dubai? If not, which one? um, yeah, I mean, the presentation is available for the Century YouTube channel itself. So you can look into the Century's YouTube, subscribe it, and you will get that. So that will be available to you. And so that is that, guys. Again, as far as we are talking about, other markets also, and we are talking about different other sectors as well. Try to look into tech area, whether it is India or not. Even the tech services, cloud-based services are something you can definitely look into. We can definitely take a view on Indian sectors as well, because after the budget, there has been Sensex has jumped, very high. In last 6 days, if you see, it has gone up by 5,000 points, and I mean, except the FMCG sectors, we have seen all other sectors increasing. So that is also one thing, because most of the analysts for the Indian markets, they are expecting a significant upside in a shorter period of time. You see stocks like SBI, they have gained very high after their quarterly results have come up. So most of the indices, even the mid cap stocks, we have seen going higher. And this is a budget rally. I mean, 6 straight days we have seen a record high. Earnings have been very positive for the stocks. So we have seen Nifty also going higher by almost around 15,000. Sensex is also up. In last 6 days, it has gone up by 5,000 points. So you look into companies which are related to banking, Axis Bank, for example, ICICI, look, TCS, for example, Reliance also. Look into SBI, for example. So now again, we are looking at a very bullish formation for stocks. And if you see, for example, even for oil prices now, oil is going higher and higher, and that is also something which you have to look into when you're looking at um, auto companies or metal companies or consumer durables. These have been the top gainers in last few weeks. So FMCG has not gained too much, but if you see auto companies, metal companies, consumer durables, this is something, again, consumer durables are your essentials. So this is what I told you initially, that consumer durables will always be a good idea to look into. So that is it. Now, how the earnings come in the next few weeks is going to decide the course of market. So inflation data will be tracked heavily for Indian equities. So that is something which you can look into. Public sector banks, again, good idea. So overall, again, if you want to have more information, you want to know more about which Indian equities technically and fundamentally you can look into. You can see some ETFs over here, and also you can talk to our consultants. Like, we are not doing very actively in Indian markets, but then there are a lot of people who are investing into Indian equities back home as a part of the diversification. So that is again something which you can look into. And there are different things. I mean, I was checking a lot of portfolios in India, and yes, I mean, there is, except the tourism sector, because tourism sector as of now may or may not be the right time. But then, look into budget. Like, for a lot of people, the budget is half full. For a lot of people, this is something which is half empty. It depends how you are looking at it. Like, if you see, with vaccines coming in, um, the healthcare sector, again, a lot of people are vouching for it. Hospitality or hotels and tourism, if in India, what I'm listening, and I'm sure everybody is talking about, because government is increasing a lot of focus on health and well-being, because they want to again increase the tourism. So there is a lot of action taken over there. Infrastructure development, again, like, as per the new budget, there will be a lot of money spent on the infrastructure development also. That is happening due to increase. I mean, they want tourism to go higher. That's why there is a lot of money spent on the infrastructure as well. So look into infrastructure, look into hospitality. But as I said, it should be a combined mixture. It should not be dedicated to only one. So we are looking at financials, we are looking at hospitality, we are looking at infrastructure. These three sectors are something you can look into Indian equities. As far as global are concerned, cloud computing firms, clean energy, solar power, this is something which you can look into. Among technology, as I said, medical tech like Teladoc, EV companies in China like Xpeng are something which are very much talked about. Next time when we meet, friends, we'll talk about few trading strategies which can be really helpful. So today it's all about stocks and different sectors which you can invest for 2021. So how you can be more effective. I told you how you can protect your portfolio from volatility. What are the steps you should take? So next when we meet, we'll have definitely a lot of sessions. And next when we are meeting, we'll talk about which other strategies we can use. And if you like this session, please review us on Google. It really encourages us to continue doing sessions like this. And we really like to spread more and more information through portfolios. We take your personal questions. We are conducting trainings day on day. Clients or no clients, anyone who wants to learn, please talk to your relationship manager. We are going to conduct a customized, personalized training session for you and explain you how the market works. This is a part of the awareness program, which we have started not now, not last year, but it has been going on endless in Century Financial. So if you want to book your training session, talk to your relationship managers. I will be available for a one-on-one session to explain you how the platform works, what are the asset classes which are available, how you can manage your risk effectively, and a lot of trading strategies. So thank you so much for joining. Please, if you will have more questions, do write to us or talk to your relationship managers, and I will directly get your queries. Till then, Please stay safe. A big word of thanks from Century Financial, the team, and myself to all those people who are working in medical or healthcare sector, or who have friends or relatives who are working in healthcare industry. Pandemic is not over yet, and everyone who is working into this sector is risking their lives day in day out. And I really, really appreciate on behalf of my family and my entire team in Century Financial. Thank you really very, very much for your service, and I hope everybody stays in good health and definitely in good wealth. So be safe and be invested. Reach me out and let's have one more training session again. So my name is Yogesh. Thank you so much. Do review us on Google, and we'll meet soon.